Hey everyone, welcome in to another daily editorial here on the KE Report. We're going to be talking markets with the S&P over 5,800, maybe recapping a little bit of the inflation data from this week and recapping some of the bank earnings that are coming out pretty strong, and at least the market moves are pretty strong on the back of those earnings. We are chatting with Joel Elconin, co-host of the Benzinga PreMarket Prep Show, also editor of the PreMarket Prep website. Joel, let's start off with the broad averages, and I think most importantly, the S&P now over 5,800 as we are recording this, having a good day today and a pretty good day this whole week. That trend higher, even in the face of extended volatility. Volatility still being in the 20s, but look, I guess investors are taking both sides of that trade, saying they'll buy a little volatility, but also continue to plow money into these markets. Joel, what are you noticing within the markets that's driving this continued move to all-time highs?
Good afternoon, gentlemen. Thanks for having me on again. I think, your Goldilocks scenario continues. You got pretty much benign inflation data today, however you crack it up. So while that is not a direct indicator of lower interest rates, it just shows that, that perhaps inflation's under control. I think stability in interest rates, the terminal rate is much more important for banks, for corporations to know what their borrowing costs are going to be. And then, hey, you don't want to buy your high flying tech stocks. You're looking for value stocks. You get JP Morgan having a good report that's up over 5%. So you have tech maybe, cooling off a little bit today, not all tech. I'm looking at Apple, Microsoft in the red, but all of a sudden the value trades back, right? Stocks with low PEs, economy still seem to be doing okay. Good start to Q1 earnings season and benign inflation data.
Yeah, Joel, it has been interesting to see again better market participation in other sectors. You brought up the financial sector there, but there's a lot of sectors doing good. We've seen healthcare running. We were talking about the home builders off mic. They've been doing well. Utilities have been doing well. Really, it seems like a healthier market. Even the small caps are kicking it in gear a little bit. What's your lay of the land as far as more participation in more sectors?
Well, first of all, the utilities. I think we talked about this last week. Your boring old utilities, your grandma and grandpa stocks. But now there's a little bit of a story to it, right? With AI, right? You're going to need the energy. Now, those stocks, some of these stocks, Constellation Energy was hit the last couple of days. Google and Meta are asking for lower utility prices, but you have something to trade at reasonable valuations. They have a dividend and you have a story behind it. So you look at the utilities, a safe haven, especially if you don't have to worry about rates going up anymore. As far as other sectors go, the chips are the chips. I mean, having a quiet day today, but that's quietly posting a new all-time closing high yesterday. So, I mean, you got the best of both worlds. The IW really wants lower rates, so that's been a little bit more stubborn. But, based on the months, hanging a lot closer to the monthly highs than it is the monthly lows. So, even in the absence of lower rates, you're still getting a little appreciation in the ultimate laggard trade. If you like the laggard trade and you've liked it for a while, then you could still be sitting on the IWM. You're looking at healthcare once again. These stocks just do not trade at high valuations. They're slightly off their old-time highs, but you look at a stock like, Gilead Sciences on the verge of, getting over its COVID levels. So they're just spreading the wealth a little bit, right? Selling something, you're buying something else. So also with the outsized move that you've had in the crude oil market, you have ExxonMobil back at an all-time high. Once again, those are stocks that are not trading at very high valuations. So, why not? Why not mix in a little high tech? Why not get some value? Why don't you spread the wealth?
So, Joel, you mentioned bank earnings here. We are entering earnings season. What do you think could shake up markets, and what are you going to be looking for in terms of market reactions to either, I guess, forward project that markets are going to roll over, or that, hey, this Goldilocks rally is just going to continue?
I don't really think it's earnings that is going to necessarily derail the market. There might be a little bit of disappointment, if you come out with some tepid guidance. But companies have been keeping the bar a little bit lower. I mean, if one of your big tech stocks, lays an egg, that's important. I think that, the biggest overhang in the market, and no one really seems to care, is your geopolitical situation here. There's going to be Israel is going to respond to Iran. I mean, that's going to happen. So that's something that will produce a jitter in the market. But what did you have when Iran attacked Israel? You had a sharp pullback in the market, and it was bought up. So the market just seems to be ignoring geopolitics. If the U.S. is dragged into the situation, U.S. troops, that's a little bit story. That's a different story. And then the election. It's a highly contested election. Will we have a winner the day after? So I say geopolitics in the election because I don't think that's been kind to the market. And of course, some earnings disasters, with earnings season just starting. But right now, I mean, it's off to a decent start. So let's hope the momentum continues.
Well, Joel, and along that same theme, looking internationally at geopolitics, there has been some posturing from China on what they're going to do about their real estate markets, if they're going to stimulate it more. Now there's people calling for more fiscal involvement from the government in addition to their monetary policy. They've been trying to stimulate it, but saying it's not easing, but they're basically easing, and they're supposed to be doing some big announcements on that this weekend. But it looks like it's been a really turbulent week for the Chinese markets, and some of that has spilled over into concerns about how it could affect the commodity sector, how it could affect international companies. What's your take on China?
I mean, you have these percentage gains to the upside, you have to have some kind of meaningful retracement, some kind of pullback. And that's what you have. After you have a big move in either direction, then you have a counter move. What you want to see is consolidation. You want to see a couple loads, stability in the same area. That's what you're seeing in Baba over the last couple days. Baidu, these stocks finding buyers at intermediate levels. They can't cherry pick for under 100 anymore or under 90. When I look at something like Alibaba, also going back to the value trade, I mean, if that was a US stock, where that thing would be trading at. So you had the very large base, the breakout from the base. And then it was for, their earnings and their PEs are fine. But the fundamental story with China was, the government not working with or working against these companies. And now they're doing the Bazooka Joe, Jerome Powell routine, and the market's liking it. So once again, low valuations, rotation. I mean, something like, why not take a little money off in Microsoft or Apple or some of these stocks that might not have, have as much future appreciation. But yeah, nice rebound here for China. The next thing is, get back, make new closing highs of the move, and actually build a base above a supportive base above the highs that it made earlier in the week.
Joel, remember that whole concept of there is no alternative? When interest rates were low and money just piled into markets, everyone just said, look, of course it is. There is no alternative out there. But then all of a sudden, interest rates were higher. People were saying, hey, I can get 5% in a money market fund. That's safe. Maybe I'll do that. Are we heading back to that environment, or are we there already where investors are back to thinking there is no alternative? So let's just put money into an index fund and let it ride?
Well, you know how I've been and how I've looked at the index funds. I mean, yeah, you get that kind of appreciation. I mean, there is an alternative. It's just not as sexy as the other alternative. Also, I think you just have to look at, short term versus long term rates too. I mean, you do have the short term rates coming in, but the long end of the curve is not coming in. So, there is alternatives, but they're just not as sexy as the returns you can get in the stock market. Now, we know how quickly that can change, but right now, I mean, you hate to just say, hey, let's buy the laggards, but right now, I mean, you're being rewarded in stocks that, have been continue to make money, continue to, satisfy, on the top line and the bottom line. So there is an alternative. No one just seems to care.
Well, Joel, speaking about alternatives, and there is no alternative, let's also talk about how people transport around in their vehicles. Big news out of Tesla this week, Robo taxi time, and then didn't do so great after the meeting, laid an egg today, speaking of laying eggs, but there is an alternative, Uber and Lyft. So what do you make of that?
Elon being Elon, right? The hype, the over delivery. Now, I've looked at this, from a couple different perspectives. My partner in the pre-market show, staunch bull of Tesla building a large position. And, no details, the same thing, right? Like we're going to do this. Now, he's gone over some of the videos, and the Robo taxi is still a few years off. Some people were like, well, they don't like the two doors, versus four doors. Who needs a 20-person vehicle? But I think right now is what the market's looking, and they're looking at Tesla is like the people keep their cars for a long time. And yeah, are they going to be ditching their cars to take robo taxis? First of all, the FSD technology is not there. But if you're in this because you're waiting for immediate gratification on the robo taxis or the robots, well, then you shouldn't be on the stock. I think what could make this extremely valuable company. I don't know if you saw the robot that you had on there, pouring cocktails at a party. Starlink, I don't know where that fits in the entire picture, but it is a technology company. And also, you got to take into perspective, where was Tesla? Just a few months ago. I mean, you're talking it down 8% today. I mean, that ended the year. It had a bad month in January, but as late as March, this thing was trading sub 150. So a move from 150 to 260. You didn't get the exact results that you wanted, or the perfect robot doing things, or perfection of FSD. A little bit of a cooling off period, but once again, where do buyers step in? Where does the stock build a base? No catalyst coming for a while. Earnings is coming up. They just had deliveries. So, high expectations for Elon. And once again, he doesn't meet those expectations. But that doesn't mean that in a year, 2, 3 years down the road, that he won't.
That's true, but that's what Elon does, right? Overpromise, underdeliver, but he usually does deliver just a few years late. Oh, the stock getting hit though, and money rotating into the current, I guess, transportation options and needs of people. Joel, it's always great chatting with you. Lots for us to talk about in these markets. And hey, the party seems to continue, so I guess ride that wave higher, even though I know we were getting a little worried turning the corner into this month. So far, this month is doing just fine, and S&P over 5,800. Again, Joel Elconin, co-host of the Benzinga Pre-Market Prep Show and editor of the Pre-Market Prep website. Click that link in the show notes to visit Pre-Market Prep. Joel, thanks for your time. Have a great weekend, man.
All right. Thank you, gentlemen.